there's a lot of opportunity coming for GJ, and we've seen huge volume drive into a market, a lot of news that's caused disruption in these markets and can potentially bring in huge volume coming towards this year and next year. So it's very important. I want to analyze it in depth because this month has been a crazy month. We've seen huge moves in the pound, huge moves due to yen news, and I want to cover, as I do this every single month, I make an in-depth video covering what I expect and possible trade setups for next month to help you guys trade these markets and be safe, because we've had huge moves. They look like, oh wow, I could have catch these moves, but we had 100 pip pullbacks. We had wicks that randomly came out of nowhere, and this can easily slip your stops and could easily put you in a very bad position and not make you have a profitable month. So I want to cover what my plan is for next month and what I'm going to look at the chart. We've had a monthly close, a quarterly close, and there's a lot of information. Although we've had a lot of news, it's respected key structure areas, and I want to cover all of this. So with that being said, let's get straight to the chart. As always, guys, welcome back. Harry here, known as Trade Sharp, and as you know, I make these videos. You can check them out on my channel. Every single month I made a video saying what I expect to happen and what I'm looking for as a trader myself to be able to trade GJ, which is my main pair. So I look at the possible setups, and this is a great thing and a great practice to do at the beginning of every month with a new monthly candle, to come and analyze and understand where we are, what's happened, and keep yourself involved in the market, involved with the economy, because if you have a better understanding of everything, you'll be more confident in your positions and so on. So I always do this, and I post this video to help you guys, and it seems to be helping because a lot of you align with my analysis and we're able to trade the same ideas, which hopefully and do end up in profit. So that being said, what we need to do here is we need to cover the 3-month close, because we've had a quarterly close. So this is a 3-month candle close, and it's very important for long-term investors that they look at this close. And we have to also cover what has happened. But before we start that, as always, guys, can you help support the channel? So if you find this video useful, please leave a like. And if you're new here, you feel free to subscribe, right? So I post out a lot of content to help you guys, and it's basically a free course on my channel. If you look at it properly, there's a lot of useful videos that I really put time and effort to make sure it's giving you guys value. So that really does help get this out to more people, so they're not watching videos that do not help them trade. And feel free, if you want to discuss and see my more daily analysis, see what I'm looking at during the day, see the trades that people in the group are taking, you can join the free groups down below. And yeah, with all of that shilling out of the way, we're on the road to 10K. So if you can make that happen, we'd really appreciate it. Let's get straight into this video and to the most important part. So we'll start on the 3-month chart here. And if you look at the quarterly, it's been a crazy quarterly. We've had a huge pullback. Now, I was speaking about these potential backfills. So what we see on quarterly candles is we see something which is known in traditional markets as backfills. When we see a quarterly candle open, we normally get a backfill on the last candle. And what that means here is, if you look at the candle body, the wick fills the candle body, backfill around the bottom 25% or somewhere around there, we normally get a backfill. And when this quarterly opened, we got the backfill, and then we got a push up. So that was accurate. We got that, and it was nice to see. But what ended up happening, and if we go on the daily, you can see how that happened in the quarterly. We came down, we got the backfill. So if we mark this where this line is here, we can see that if we go back on the quarterly, that line is around the backfill area, right? So that's where we pulled back in the quarter. And then if we go back to the daily where we were, we can see we got the push up to the top of the range and rejected the top of the range. But this was not any rejection. This was a very, very deep rejection here that actually gave us a crash due to GBP news. So I'll cover a bit of the news. What basically happened is we had yen. They said they were buying up dollars to help, and they normally do this type of scheme to try quickly adjust the exchange rate. But the yen fiscal policy has not changed, right? So they basically go with a very dovish stance, which means that they just keep interest rates low and help the economy and keep their bond buying program high. So that means that they're just trying to support the economy, but that is not necessarily good for their currency because it starts to devalue it. But what we saw happen in the pound was very, very interesting here, is that we saw the pound come out with also quantitative easing. So quantitative easing means that the pound, they started to throw out the idea that they will be starting their quantitative easing program, which means they will be buying back into the markets. And what we saw in a relation to that is there was uncertainty about reducing inflation rates due to that uncertainty, we would naturally see investors pull out money from the markets, and we see this big crash. Now, we've had this recovery from the crash, which, if you stick around, I'll explain why this recovery happens from a fundamental point of view. But from a technical point of view, where do we pull back to? Well, guess what? Where's our macro base on this chart? Where's our macro base? Our macro base is at 149, and we pull back exactly to the 149 levels. So let's go on the 3-month time frame and explain what's been going on. So 3-month time frame here, we pull back to that 149 major support. This is our last higher low before this push up here, and we reject it. Now this can be seen as a rejection wick, and for me it's showing me that price is not ready to crash all the way back down to possibly these lows at 133 or possibly first at 144. There is no indication that is ready to happen yet, and there's no indication as well that price is ready to blast off the screen back up to 172. There is uncertainty, but this makes sense because if we look at what happened last year, we did form a range in this area here before continuing up. So this whole wick here can be considered as an inconsistency, a black swan event. A black swan event means an unprecedented news, and the market will continue what it always did. And that's what we find. People think that, a lot of this thing can drastically change the dynamic of the market, which it can, and it definitely will if there is outcome. But if there's no outcome, if there's just a quick scare in the market, we will see this inconsistency and the market will continue with its original plan. So we have to consider that the dynamics can change, but until we start seeing policies put in place, and until news starts getting put in place and we start seeing actual things come to fruition, then we will only see dynamics change. But until then, it continues. But what has happened is that we have, slightly changed the bias, where we have broken down on ranges and we have created lows and created new highs. So we have to consider those when coming to trade. So now let's go on the monthly time frame. And what actually happened is that this monthly was looking fully bearish here, fully bearish. When it was looking quite scary, but actually we've managed to close the monthly as a doji candle, which means nothing happened, which is really surprising. It opened and closed at the same position as last month. So in this whole month, if someone was to ask you what has happened, nothing has happened. We opened and closed in the same position. So pretty crazy to think about that. And if you measure the move from the open, we pushed down 1,300 pips and we pushed up 600 pips. So it's been a crazy month on GJ. So coming into next month, this gives us a lot of opportunity. But the same sort of range that we formed here, I want you guys to understand this. This is our macro base here at 149 macro base, right? So we'll mark this out at macro base so you guys understand. This is our macro base 149. We rejected that base and we created a range. So apart from this inconsistency, I wouldn't be surprised, not that big, but I wouldn't be surprised if we create another range here in between here, have some inconsistencies before trying maybe some upside, continuing the long-term bullishness of the yen. I mean of GBPJPY, not the yen is actually bearish, but continuing the the bullish nature of this pair. So with that being said, monthly hasn't done anything and is not giving us any information. I see this as a rejection, kind of uncertainty. But when we go down to the weekly and the daily time frames, things really start to get exciting here, right? So let's go on to the daily and weekly time frames and we start seeing what's going on. So on the weekly time frame, we obviously have our weekly resistance. So I'm going to do this chart markup for you so you guys can have the same chart markup, and we can see what we've done. And I was watching this on Friday, is that we had this major weekly support here, right? So that's WS for weekly support, and we've managed to close above. So from a technical point of view, and there's some levels in here that we can't disregard, which I'll show you on the 4-hour time frame. From a technical point of view, there's no reason as to why price should not at minimum range in between here, or maybe even test the highs at 165. Definitely a possibility due to this rejection here. Now what's very nice is there's no weekly candle closing below this wick here. It's closing basically at it, and our macro structure that we broke out of, this was the initial low. Yes, we have broken this, so this is what we have to consider. If this is going to be considered as a real market structure, not as a news inconsistency, because it's a weekly time frame, we have broken this low here and broken this low, so we've technically flipped market structure and made a lower low. So there is the possibility of a lower high, and this is where I'm going to go into this video now and start explaining what ranges we have to trade and what possibilities we have possibly for sells and even buys, because there is the opportunity due to this candle closing below this, making us a lower low, because this is our new lower low. So we'll have to consider, but many people forget about this bottom of the range, and you have to understand we're in one higher time frame consolidation now. And even though this trend was nice, but this trend was only valid to keep us bullish, pushing past this level. Now we could range in between this level as a big possibility. So that being said, next time frame we go to is the daily time frame. Now the daily time frame is very interesting here, because we had a huge buyback here, and as I said in the beginning of the video, I'll explain what this buyback was. So there was a lot of uncertainty in the pound. A lot of people came risk off. They started selling their pounds because they were uncertain what was going to happen, if it was going to be a major crash, if it was going to destroy the pound. And once they started to see stabilization and the UK government intervene into, printing back and buying back some of the markets to help, recover it, they had a bit more confidence and started to invest back into the pound. And also, you could also argue at this 149 level, there was also long-term investors who made the argument that at some point the government have to intervene. You've seen this in the crash. There's a famous story when in the 2008 crash, a guy knew that at some point the government has to intervene, and he kept buying on the way down, and eventually they intervened and he made a lot of money. So you can expect investors to make the same hypothesis here, knowing that, okay, at some point they have to help. And you could expect a bounce at the 149 level because of how crucial it has been. It's been a very crucial level here in the past, so you could have expected a bounce, and that's probably what they're playing here, is they're playing the bounce and playing the possibility of the government intervention, which seems, if they've done that, they've got it right, and they'll be in a very good position for the year. So now, coming into next quarter, what can we expect? Obviously, daily is bullish and weekly is bullish, so immediately buys do make sense, right? To continue this move. There's nothing on the charts that's indicating, screaming to me, sell, sell, sells. Doji candle on the monthly, weekly candle bullish, daily candles bullish. Nothing is indicating to me, sell, sell, sell. So immediately coming into next month, I'm not going to be the first person to try sell GJ. I am going to be looking to possibly continue this move a little bit higher, or form a range, or potentially form a higher low where I can take price back up to this high and potentially continue. This is the setups I'm going to be looking for initially coming before I explain more. So if we go here on the 4-hour time frame, what do we see? Well, we've had this crucial level that many people are going to miss out on here. Which is going to be this 4-hour key resistance level, which is going to span across from here. So I marked this out. I have my main chart is up here. You can see this 4-hour level has been very, very crucial. Anytime we've been above it, we've got continuation. Anytime we've been below it, we've got some type of deep pullback. Now the only threat that we have here is that this whole consolidation area that we had in August, which was disgusting, untradeable, if we remain in this and form something like this in here, that is going to be so boring for October here. And I hope that does not happen. But as you can see, we have a clean range as to where buys make sense above. Because if you understand that 4-hour resistance where we formed, where do you think buys are going to make sense here? Well, buys are going to make sense above here, which are going to give us the opportunity to tap into this on the 4-hour time frame. So anything closing above here, I don't see as to why we should have an issue pushing up to this level here, unless we've mirrored this. So I think this should be a good target coming in 162, 800, 163. Around that area should be good, and I do expect possibly then continuation. I expect continuation at least to this. This is our macro breakdown high. So to pick the liquidity from this point here gave us the breakdown. So I don't see why not we would not extend past this point and see what happens at this area here, because we saw this big rejection wick here that gave us this downside move. We have this really dirty top here where it came back up, rejected, a lot of selling pressure, came one more time, rejected. Then we see the move down and we got this inconsistency news wick. Where does the news wick come to? This key 164, and this 164 has been a key level throughout GJ's history here in the years. So 164 flat has been a key level. So getting above 164 and now essentially 164 500 and creating solid support above there will give us a shot probably up to the all-time highs. I don't see why not. But on the bearish scenario, because things are still uncertain about the pound, and we could see the bearish scenario play out. What will need to happen is we'll technically need daily structure to flip, because the buyback here is very strong. You have to understand that this is a very strong reaction, and it's to be considered as strong as the reactions we've seen here in the past. So until we start to see a daily structure flip like we've seen back in here, where you can see daily structure flipping, here flips, then or 4-hour structure flipping, then we do not have the confidence to take further sells, right? So this is where people are going to be messed up. They're going to be taking any resistance they see as an opportunity to sell because of the bearish nature we've had. But you have to understand our macro target has been hit, so selling into this is going to be deadly. I don't see why we cannot retest it. So this is personally what I'll be looking for, is we have a 4-hour support here, and this is where it becomes basic market structure. So if we're looking to take sells below here would be a good spot, because this is our initial breakdown. If you look at what happened in the past here, when we broke down below here, this is what gave the easy sells. Everyone was trying selling in here and was getting hammered. Look at the pullbacks in this zone. But once we get the closure outside of this range, sells became very, very easy. And you can even see in the past where sells below this zone here. So if we look, everyone hammered. No, we get the closure below. That's where the easy sells come to. So I don't see why not sells below 159,480. That's where, if I start seeing 4-hour closures below there, possibly below these wicks, I need to see structure form. We could look to sell back down to 156. And all you have to do is measure these ranges, guys. That's a 250 pip range. This is why I said in the beginning of the video, we have a lot of opportunity here on GJ. And if you measure to the upside, this looks like a small move. But from here to here is 100 pips, you know, and then from here to here is another 150 pips. So we are trading in big ranges here. Stops are going to be bigger. You have to be safe. Now, until with all of this uncertainty, unless I'm in deep profits in a position or securing, I'm not looking to hold a full position open. I'm going to secure profits, and if I leave runners, I will leave runners to run, and I'll make sure that I put my stop loss in profit, so that if we have wicks like this or inconsistencies, I'll be protected. And even if my stop gets slipped, I will still have secured profit, so that my position doesn't get hurt. But the personal strategy is I want to be in and out in the market, use the volume, because we're seeing 1-hour candles, 30-minute candles being 80 pips plus. That's enough for a day. Don't be greedy. You know, understand your position in the market, understand and use that to your advantage. Not to be greedy and be in and out of the market. You don't have to catch the whole move. You have to catch a bit of the move. You have to understand the market is this big whale that, you know, swims around in the ocean, and you can't touch that whale, you know. You can't touch that whale, but what you can be is that little fish that comes and sticks on the whale to clean it. And you can take bits from it, but you're not going to be able to take everything. If you were, then you wouldn't be watching this video, and we would all be rich, and money would be an invaluable object. But still is, but you know, that's a different story. So let's go and check now on the lower time frames to start getting ranges. So now we're starting to see where sells start to make sense. Now sells, you have to be very careful, because people think we can come and extend the low. For me, I don't think we can extend the low until proven otherwise, with structure starting to shift. What could end up happening this month is we could pull back to here, start to make a range in between these zones here. I don't see why that cannot happen. And you know, unless we start breaking up, that's the more likely thing. To come back and hit our low, we need another oomph. We need another catalyst to tell us, okay, here we go, right? And that's going to happen with a candle closing back in this range. Is going to give opportunities to come and test the bottom of the range like this, and we'll take it range by range, and that's how we trade, range by range. But until proven otherwise, it does not make sense, because if you're looking at all time frames, the bearish case is becoming weaker and weaker. Yes, there's threat on the pound, but the weekly, if I took all drawings off the chart here and showed you just this weekly candle, would you tell me, yeah, I'm gonna sell? That sounds like a great idea. Or if I replay this and remove this weekly candle, and now I ask you what looks good, sells or buys, you're gonna tell me for sure sells. I'm stupid to buy that, right? And unless you're gonna come and now in the comments tell me with some BS, oh, smart money is, I don't know what, fill this, that, take out this liquidity. No, fact is, if I remove this, you can see we got sells after that weekly candle. But where did the sells come to? Our target. That's our target. Target is the bottom of the range. So don't argue to me that taking buys at this zone was a good idea. We got the sells, but they rejected. So after this candle, it does not make sense to immediately sell. You know, we need weekly candles probably closing back into this range again, right? Oops. So probably if we go on a daily candle, let's see where daily starts to make sense for sells. I mean, daily starts to make obvious places below the low, but that's not very helpful here. If we start closing below here, yeah, you can argue that long-term sells might come back and retest the bottom of the range. But for a weekly, I probably need to see another weekly candle close back below 156 into the range to prove to me that this is not just an inconsistency. And that's how I'll plan that. Otherwise, what we could end up happening is playing this ranges, right? So we know buys above this point. Remember that 4-hour support that I drew out. So let me go show you back that on the 4-hour. So we know buys above this zone here. Makes sense, right? To continue the upside. Any pullbacks that create support. And if they create support and come back above 159, because in here you can have a lot of inconsistency. You know, you could look to, if we flip structure, to take buys based on how daily candles are closing. But coming back above 159 gives us the opportunity to test into that. And the key level for basically flipping whole structure is going to be up here at 164 plus. So it's going to be very, very interesting here on GJ. That's what we're going to be looking for here. We'll see how the month opens up. And yeah, I'll keep you guys updated. Be sure to be in the Telegram. And if you want a video on gold, let me know so I can post a video on gold sometime this week. I can post a gold update. And yeah, a lot of information in this video. Very in-depth video. Lots of opportunity coming into next year and this year due to the position that GJ's put us in. We're trading one big range and a very volatile range, which is very good as traders. So with that being said, guys, take care, trade sharp, and until next time, peace.